We're roughly $55 billion in assets today. As I had said, I was looking at the active ETF market, and that market in the US was about $60 billion in assets. That's now over $1 trillion.
Nothing lasts forever, right?
Nothing lasts forever, although mutual funds have sure been around.
Apart from mutual funds, yeah.
Yeah.
Hello and welcome to Exchange Traded People. I'm your host, Michael O'Riordan, and today's guest is Mo Sparks, Chief Product Officer at Direxion. Mo, welcome to the show.
Thanks for having me.
So, Mo, I'd like to kind of split the conversations into two parts. The first is a little bit about you and diving into your background and to find out about the man. And then the second is talking about the industry, getting your views in terms of what you guys are seeing at the moment and what you kind of see down the line. So to dive kind of straight in at the deep end, my first question for you is, when you were a kid, what did you want to be when you grew up?
Yeah, well, first off, obviously, as I said, thanks for having me. Listened to your show for a while, and so it's an honor and a privilege. But yeah, hey, I mean, I love kind of talking a little bit about my background. You know, non-traditional. I grew up here in the States and in Montana, and so large state, small population.
Wow, were you a cowboy?
I wasn't a cowboy. I was one of those suburban Montanans. I had lots of friends that had farms and were full on cowboy and cowgirls. But my story's a bit different in that my dad was a basketball coach, and so growing up, I was drawn to the game of basketball and was in many ways my first love. Right, happily married now with 3 kids, but my whole life until I was about the age of 14, my belief was I was going to play in the NBA. I was a professional basketball player. And, you know, I can still recall the moment where I recognized that my dream was just that, a dream. As I'm a 14-year-old in a gym shooting a basketball and doing some training with a gentleman who had just kind of went to the NBA combine, and I looked at this guy as kind of a role model, looked like me in a lot of ways, but had a level of athleticism that was a little bit higher than where I was at that phase, but what I was hoping I'd get to. And he came back from the combine and said, couldn't even stay on the court. And that was the light bulb. Maybe I need to start thinking about something else other than basketball. This can just become a hobby for the rest of my life.
Was that a disappointing moment?
There was the mix of things. In the moment, very much so, but I think, you know, in the back of my mind, there was also a bit of relief because, you know, having seen my dad as a basketball coach and being fortunate to be just exposed kind of behind the curtains of the game, saw just the level of commitment that goes into obviously being unbelievably great at something, particularly sports, and how, you know, there could be a cost to that. And particularly, you know, more on the personal side as you're, you know, going into something like college. I watched all these college athletes and they slept and just breathed the game of basketball all day long. They didn't have a more traditional experience. And so I think waking up to that was a nice thing. And I loved intramural sports throughout college, still love the game today. But not the path for me.
So the path for you was clearly into finance and then into ETF. So how did you get on that alternative path? Let's call it.
Yeah, so I left Montana to go to school in the Southeast. So I went to Clemson University. I'm a proud Clemson Tiger, and you know, there studied finance undergrad. I'd always been drawn to numbers. I think it was going back to basketball as the passion. I love box scores, and so I became kind of obsessed with numbers through box cards and trading cards and all the things associated with sports in general. And I was coming out of school and, you know, thought actually I'd maybe transition back to Montana, work with my parents. They had established a small family business that was a hospitality management company. And so it transitioned from coaching into a different industry, and saw that potentially something that was attractive. Then we went through the financial crisis, and, you know, job opportunities associated with real estate were much more limited, and my parents' business was, you know, in a different place than it was as I had kind of entered school. And so I started looking for things that were a bit more traditional, and was very fortunate to get introduced to a number of people actually at the Vanguard group, and started my career at Vanguard in one of their rotational programs. And so began actually in one of their satellite offices in Charlotte, North Carolina, and anticipated that I was going to kind of make a home there in the Charlotte area. But as part of that program, had an opportunity to move up to the headquarters in Malvern, Pennsylvania, and there really got to understand the true operations of that business and the breadth of it, and saw a lot more opportunity, and made a pitch to kind of stay in that area, and that was granted to me. And so then kind of transitioned into a more traditional career within finance right there in Malvern. Was able to spend a good amount of time actually over in London working on some projects related to UCITS. And so entirety of my time with Vanguard was basically encapsulated by product. And so my role today is obviously an evolution of that, but it was all born there.
And then from Vanguard on?
Yeah, so from Vanguard, I was about a decade into my career, and was feeling very fortunate for all the various opportunities I'd had to that point. But I always was kind of itching to experience something different, and so I was assessing whether I'd go back to business school and get an MBA and really allow myself to get more diverse perspectives. And was really close to making that decision. I got a phone call from someone who I respect and now work with again, named Doug Jonas, here as the CEO of Direxion, and previously had left Vanguard to go to the New York Stock Exchange to become their head of exchange traded products. And he gave me a call and said, "Hey, I think I have a really unique opportunity for you here." And I was doing a lot of work looking at some pending regulation that was about to take place in the US called the ETF rule, or 6C11, and what that would maybe do for particularly active managers entering the ETF ecosystem. And so his pitch to me was, "Why don't you come join me at the stock exchange? I think we have something here that's very dynamic. You'll get exposure to the fastest growing kind of industry within asset management. And we need to rethink how we support this next generation of asset managers post ETF rule."
Did you find that the culture from working for an issuer versus working for the exchange was quite different, or less so?
Yeah, there clearly, obviously, in any profession, there's similarities, but there are some very stark differences. One, in terms of issuer mindset, was kind of very tunnel vision, very focused, very methodical in terms of approach from a product perspective, particularly at an organization like Vanguard, in a positive way, and some drawbacks as well in terms of ability to move fast. And then going to an exchange, it was opening up and seeing that there's more than 31 flavors of ice cream. There's a few thousand flavors of ice cream, and seeing various investment philosophies, just getting exposure to so much of a bigger ecosystem that powers, an asset management firm. And so when you sit in an issuer, you sometimes get insulated to, these are the people. You step outside and you say, wow, there's so much more that actually makes all of this work and come together. And so a place like an exchange is a really unique, I think, spot to sit too, and that you're truly at the center. Everyone has to kind of come through your pipes, particularly in ETFs, to make everything function. And so there's that. Plus, an organization like ICE is very entrepreneurial. And so, the founder still runs that company, kind of employs that as a real focus of the organization to move quickly. And I was admittedly drawn to that as well, just given kind of my background growing up in Montana with parents that were entrepreneurs, and just seeing how fun it is to be able to kind of move quickly and fail, and then learn from those failures and go try new things.
I guess working at an exchange, you see the industry from a very different perspective or different lens than you do from an issuer, right? As you said, it's an issuer, it's very kind of tunnel visioned, whereas exchange, you're looking at a much wider ecosystem, right?
Exactly. Yeah, you quickly appreciate the breadth. And there's lots of things that you wouldn't go look at if you're sitting in a product seat at Vanguard, that you quickly get exposure to at an exchange that, if you're intellectually curious, are very interesting. And so that's one of the things that I really enjoyed.
But then you decided to go back to the issuer side, and now you're at Direxion by way of Raymond James. So what drew you to Direxion?
Yeah, so I think, one thing I mentioned, obviously, Doug earlier, is Doug coming into the seat in November of last year as the CEO. And, him setting course for kind of the evolution of this business, and, an ability to come in and join him was kind of one. Two is, as I really started to better understand the Direxion business, it felt as though it was at an inflection point. Extremely successful, founded in 2007, 2008 in terms of ETFs, had grown quite rapidly over the last 5 years. Very dynamic in terms of the audience of traders that we serve every single day with our more sophisticated products, but very entrepreneurial. And so we're an organization of roughly 50 individuals, very tight knit. We're diversified in terms of having offices across the U.S. as well as globally, and so a presence in Asia Pac, and so a place you can come in and kind of more instantly make an impact. And so I was kind of desiring that go back to the roots, and I'd always done so in my prior roles, and kind of finding entrepreneurial things within a big organization. This to me was the right time to go somewhere smaller and that is truly entrepreneurial, and see what we could do.
What are the learnings you've taken from your career? Obviously, you've been in the industry for quite some time now. So when you think of like learnings that you've taken, what are they, and what advice would you give, say, your 21-year-old self now?
I think there's a few things that I've kind of learned to this point, and I try to kind of employ every single day still. Is one is just stay intellectually curious. And so I think that's just a really valuable trait, is just to go ask why when you come across things, and to really be broad in terms of what you look at. And so, in some ways a bit crazy. Every single day I scan across probably 10 to 12 different newsletters that I'm subscribed to, and kind of consume various point of views and perspectives. And I think that's just a really valuable thing, and that's that curiosity. So one is be intellectually curious. And I think two, which is somewhat related, is from a relationship standpoint, say yes. And what I mean by that is, when you have an opportunity to go have a conversation with someone who you don't know, it's teed up for you or you create, go do it. You never know what's going to happen. And I kind of have employed that throughout my career. As I started at Vanguard, and I don't know, I think I give my parents a lot of credit for this in terms of my upbringing, but in the first 60 days of my role as an analyst within the product group at Vanguard, I went and met every single person within that group of 50 individuals, and had a coffee or a lunch or a meeting in an office to get to know people. And I found in my career, you never know what you can find in terms of a through line, both at a personal level to create a connection that then in some future state creates value for you in a business sense, but then also just to be able to make additional friends. And then I've carried that forward kind of throughout my career, as being at the exchange, at the centers we talked about, so many people coming through. And I always say yes, even if it was something that thought it was maybe a little off from what was in the wheelhouse, just didn't know what would come from it. And so I think that's a really important thing.
It's kind of like just having that open mind attitude, right?
Yes. Yeah, I think it's a bit of, that's where I think the upbringing of just being a bit of an optimist in terms of the good that can come from things and from people. And I think if you employ, that say yes mentality with just being curious, you tend to find it leads you into interesting places. And so, I never would have thought I'd be sitting in the seaport of Boston having a conversation with you as a 12 or a 14-year-old that was in Montana. That was not on my radar, right? And here we are. You're in Spain and I'm here, and we're having a conversation. I think that's pretty powerful in terms of how you move through your life.
Absolutely. It's cool, right?
Yeah, it really is.
All right, so kind of shifting tacks a little bit and kind of moving on to the industry, and interested to kind of hear your views on current things. So Direxion is obviously best known as a a leverage and an inverse ETF house. What do you say, or like what do investors often misunderstand about these products?
Yeah, so as you referenced, we're roughly $55 billion in assets today
Wow.
across the lineup, north of 110 ETFs. Primary focus is, yes, leverage and inverse ETFs, both diversified, say off a broad index like the S&P 500, or more concentrated to, say, a single stock like Tesla. What's unique about our products is they're sophisticated trading vehicles. And so they're built to be held for a single day. And so they offer this feature called a daily reset, which means every day, let's use S&P 500 as our example, we're targeting, say, 2 or 3x the return of that index, both on the bull side, so market going up, or the bear side, right? And so with a product that's more sophisticated with that, it's really important that an end user or a trader is educated in terms of how they function and what the repercussions are of potentially holding a product for longer than a day, right? Because that's what they're built to give you, is that exposure for a singular day. And so I think as people first see our products, some can be drawn to looking at, well, that returns a lot. And they're volatile, and that can be interesting. I think, that is the intention of the product, but it's important for an end, I call them trader, an end trader to understand what these are. These aren't investment vehicles, these are trading vehicles. And so I think that's the misconception often is associated with placing them in a bucket that they don't deserve to be placed in, which is calling them an investment vehicle when they're a trading vehicle. And so I think that's an important distinction. And if you look at our business, increasingly we're looking at opportunities to, diversify as any company does, as it looks to grow and expand. And we offer today, a narrow set of more investment vehicles. And so we have, for instance, a product QQQE, which is an equal weight Qs product. We have a commodity product COM as well, that are more traditional investment vehicles. And so built to be strategically held in a portfolio for a long period of time.
Gotcha. Going back to your point about how they're categorized, like investment products versus trading products, like there are, I guess one of the criticisms of leveraged and inverse ETFs is that they're criticized as being too risky. Do you think that criticism is fair, or people who say that they're just they don't understand the products enough?
Yeah, so I think that we're the first to present to the market, these are risky trading vehicles. They're built for sophisticated investors. And so have to have a level of risk tolerance. Importantly, you have to have a level of education to understand how they're utilized. And so they're built to be a risk-on vehicle. And it's exposing you to either side of the market, depending on, directionally what your desire is from an expression standpoint. So they act as intended, which is to be a magnified return vehicle on either side of the market. So, I think that those that present that as kind of the viewpoint are in some ways misunderstanding, as we were just discussing, the intention of the product, and are looking at them as, a competitor to, something like my old firm, Vanguard, where I started my career, created, and something like an S&P 500 ETF like VU, right? This is not a strategic buy and hold asset allocation vehicle. This is a singular point in time. You see news, you see market sentiment. Obviously, we just went through an earnings cycle. What we saw is a high degree of turnover in a variety of our single stock ETFs, coinciding with either side of in earnings news cycle coming through, right? And that's what they're intended to be utilized for.
They do what they say on the tin, right?
Yes. Yeah. And I think that one of the things that I very much appreciated with this firm is I've often had the question. I've now hit effectively the two ends of the spectrum, right? A true investment management firm and a Vanguard that Jack Bogle really pioneering the concept of an index fund and keeping it very simple and true buy and hold, to now these trading vehicles that are the core business that we have here at Direxion. That's a wide path, right? But I think through that, and even my time at the New York Stock Exchange, it's all been underscored by education. And I view that as a really important thing, is from whichever seat you sit on within our asset management industry, you need to lead first with ensuring that your end clients understand how they can meet their objectives. If you're an investment firm that's at investment tools, you're focused on ensuring that they have the right resources and tools to allow them to meet that next goal they have in terms of saving for a boat, a car, a home, retirement, whatever, college, etc., and having and building solutions to allow one to meet that. To you're in exchange, you're interested in how do you tell the story associated with a vehicle like ETFs. I mean, that's a big thing that obviously you do from your seat, is discuss the benefits that can arise from this wrapper or technology that's been created and how that can actually impact end investors in terms of, you know, what they get every day. And then where I sit today, it's, you know, understanding that we have created tactical trading tools and solutions for investors that are looking to intraday, you know, capitalize on what they see as an opportunity to do so.
The US ETF market is now, I think it's over $11 trillion. Where do you think the next $1 trillion of growth will come from?
Yeah, I mean, to have to just pause and say, what a remarkable number. 11
Yeah,
trillion,
crazy, right?
It really is crazy how quickly it has grown. I mean, I think it's, you know, roughly every 5 years the market has doubled, right, in terms of assets. And I recall even when I started the exchange in 2019, as I had said, I was looking at the active ETF market, and that market in the US was about $60 billion in assets. That's now over $1 trillion in a 6-year period. And so, you know, more directly to your question of where do we see kind of the next legs of growth for this industry, I think it's across the board. You know, I think what's so interesting about the market now is there's so many green shoots of opportunity. You can talk about expansion within fixed income. You can talk about active ETFs, as we just did. I think particularly what's interesting, obviously, to us in our business is opportunities across kind of the derivatives-based product market. And so I do think that, you know, despite us seeing a lot of growth in that market in the last 3 to 5 years, I really have a sense that we're still very early in that journey, and there's a lot more opportunity there.
Are you referring to kind of like the defined outcome buffer type products?
So I think it's even expands beyond that. That's obviously kind of the entry point with someone with like, yeah, an innovator and what they created in 2017, 2018, and how quickly those have taken off. And then kind of the next wave behind that was more of these derivative income products with, say, you know, JP Morgan, a JET-B, a JET-Q, and then all of the offshoots off of those. And then now you have more single or basket derivative income solutions. And so, you know, if I take the big step backwards, I think what's beginning to happen, which has happened kind of time and time again across the ETF industry, is, you know, something that historically is maybe a bit more liquid and hard to access from a trading perspective, as well as was limited in terms of target audience. And so derivative-based products are really a function that was only available to those in private wealth and at banks, right? So ultra high net worth individuals have, for a long period of time, been able to get structured products that are derivative based, that are both buy and hold solutions, as well as things that are more tactical trading solutions. And I think that what we're just beginning to see is that tidal wave come into the ETF wrapper. And I think as that starts to occur, because of the benefits associated with the technology, I think you're going to see it continue to expand relatively quickly.
Just following on from that point, in terms of like product innovation and what's next for you guys, it's basically those derivative based products. That's what the kind of pipeline looks like. And you mentioned earlier kind of like more diversification. So is the plan that you guys are going to go away from just being known as a leveraged shop and become more kind of a broader solutions provider, let's call it?
Yeah, so I would think about it as, you know, as we've kind of coalesced around, you know, what the next 5 years looks like or so. You know, we view ourselves today as a leader in complex and derivative-based solutions and products. Primarily in the ETF wrapper, we offer some mutual funds today as well, but today leading within levered and inverse. And that's a place where we will not take our eye off of that leadership position and want to continue to innovate. We see some opportunity to do some unique things. We have some products coming to market later this year that will be a little bit different than those that are in market today. I think offer traders a new entry point into some of the views in which they're looking to express. And so we'll see things there. But then, more directly to your question, yes, I think we're in the process of really assessing where we think in broader derivatives we can be a leader, and where it aligns with both our internal core competencies, capabilities, etc., plus a little bit of our desire to grow and to diversify the business, both in the sense of the product line and then, importantly, globally as well. And so we today have a business that has a good bit of assets concentrated within Asia Pac. We've done very well there. We have an office in Hong Kong, and some people that sit there and support that region every single day. We're assessing other markets and trying to figure out where we fit, and not with just our legacy and core products, but also potentially with new products.
Going back to kind of the macro industry again, so we kind of, when I mentioned the $11 trillion of assets in ETFs in the US right now, it's like, and you mentioned it's doubling in growth, and it's like everything is going like super well right now. The wind is definitely in the sails here. But when you look into your crystal ball, can you see any threats to the ETF wrapper in the immediate horizon? Because nothing lasts forever, right?
Nothing lasts forever, although mutual funds have sure been around.
Okay. Apart from mutual funds, yeah.
I think they celebrated their 100-year anniversary just in the last year or so. I think investment vehicles tend to stick around for a long period of time. I think as I look at the industry today, I don't think that there's an impending point of doom. I don't have a crystal ball. I wish I did. I think that would benefit me in a lot of different ways. It sure would make my job as head of product and strategy here a little bit easier if I could really understand every single day what tactical traders are looking for. But I think the industry as a whole, I think, is going to continue to grow. I think it's more resilient and healthier than ever. And I can say that having sat in that seat at the exchange, really seeing the ecosystem that has developed to support this product set. And I think that that's extremely important, from the custody banks to the admin shops to obviously the trading firms, which are really important, and EP communities across the banks, to obviously issuers, and then the end consumer investor or trader of the products. And so, I think if you fast forward a longer period of time, there's always, I frame ETFs as a technology, because I think that that's what it is. It's built for today's modern environment where most of our things run through a cellular device, and an ETF is built for that time. I can't predict, AI is clearly, there's just a little bit of CapEx happening in that market, and just a few players looking at VR and AR and AI more broadly, and how that influences human behavior, I think could ultimately result in something different as it pertains, to investment vehicles. But I think we're talking a long ways out. Everyone's discussed tokenization. Everyone's discussed direct indexing. I think there's a place for those things, and I think some of those will grow, but I don't see them as great disruptors.
So where do you said you don't have a crystal ball, which is a shame.
I know.
Where do you see the US ETF market in 10 years? Just double or triple the growth of today, potentially?
Yeah, I think that's right. And if you do find a crystal ball, please.
Yeah, sure. I'll send
it
on to you. Yeah.
Yeah, that'd be fantastic. I think if you look at the global asset management industry, I think you're roughly 75 trillion, which that's a lot of zeros. But in the US here, it's roughly 40. That split is still skewing towards mutual funds, and a lot of that is driven by kind of two things: one, money market assets, and two is defined contribution retirement plans here in the States. And so, I think that for a while, the industry has been trying to naturally break into both of those places. There's been, developments even in the last 18 months in both spots, right? And so if I look at what that, I think that means is, I think ETFs, very quickly in that 10-year span are likely to take over mutual funds in terms of assets. So that would be probably my my bet, if I was a betting man, is I'd say for set a calendar date and have this conversation again in 10 years is here in the US, ETF assets surpass that of mutual fund assets. And in some ways that's not an extremely novel prediction, but there's still the inertia of compounding is quite strong. And so mutual funds, as we talked about, aren't going away. But I think if those things start to unlock and trillion plus dollars in net new cash flow into ETFs, year on, can very quickly, with that additional compounding effect into the ETF market, I think make that happen.
That reminds me, I'll send you a calendar invite after this for 10 years to the first.
Yeah, I look forward to that conversation.
Very good. Okay, so one last question before we wrap it up here. This is one of my favorite ones. So if you weren't doing what you're doing today, like let's suppose like the financial issues is not a concern, you could that's not an issue for you, what would you do with your life?
Yeah, obviously 12, 14-year-old self would have said been playing in the NBA. But I think that the more realistic answer is, aside from spending time with my family now, and we were discussing before, I've got 3 young boys that keep my life extremely busy and full on the personal side. But my happy place is on top of a mountain, and so I've always kind of said that in another life, I think I was a guide that was leading backpacking, hiking, camping trips throughout the world, because I have kind of that hankering for, there's that intellectual curiosity. The other side of it is I just very much enjoy exploring. Traveling is one of those other things that really fills my cup. And so being able to combine that with being out in the wilderness and likely with a good group of people, there's nothing like a campfire conversation, and there's nothing like working really hard to get on top of a mountain and sitting there and enjoying a cold beverage, and you choose what that beverage is. And that is, one of the more grounding things that I think we can do as humans.
I like it. That's really cool. I like that. I'm just visualizing that now. I already have my beverage of choice.
Yes, exactly. That's what I said. I like my office here in the seaport, but I think I would enjoy it a bit more if it was on top of the mountain. So,
Mo, this was a real pleasure. Thanks so much for being here. Really enjoyed it, and look forward to our chat in 10 years' time.
I look forward to it as well. Hopefully my hair looks as nice as yours, Mike. I'm not feeling like it's going to be the case, but hopefully.
Thanks, Mo.
You got it.